think, act, and prosper. You are now tuned into the Money Level Show.
I think the move in the uranium equities may be done in the very short term, but in the longer term, we've talked about several things. We've talked about the potential for production disruptions, which we saw in Kazakhstan. We saw about the potential for political interference, which is to say more theft from the government, which we saw with Kazakhstan. We talked about surprise increases in consumption and inventories, which we just saw from Japan. The Japanese inventory held has fallen by about 30% in the last 2 years. I don't know if they sold some of it, if they converted it to use for fuel, but you're also seeing the pace of restart happening around the world. And most important, of course, you're seeing the changing structure of the uranium market from a spot market, an uncertain market, to a term market, a highly certain market. All of this comes together to tell me over 5 years, this is a sector that you have to be in. Whether or not you made an entry 8 weeks ago or so, you may decide, if you get given too much too quickly, occasionally, to take some off the table as a trader. That decision's up to you. If you're thinking about a 5-year term, this is an easy trade. If you're a trader, you might want to say, you know what, I've been right. I'm going to take a little bit of this. I'm not a trader.
Yeah, that makes sense. I did want to ask you a question, because I did talk with a few people when the prices did dip that low, and some people were like, yeah, they felt like the prices were going to go lower and such, and they didn't, and it's kind of like, when you see that opportunity, it's good to pounce on it and take advantage, because it's a lot cheaper than where it was. And so I think I struggled with that before, in the markets, where markets tanked, went lower. I got too bearish. I let my bias kick in, got too bearish, and was like, oh, it's going to go lower. And then the stocks rebounded significantly, and I missed out on those profits. What's your take on that?
Let me take you back to the dumbest thing I've done in the last 10 years. And there's a lot of competition for that. But the dumbest thing I did, and you knew me at this time, the dumbest thing I did was during the COVID thing, when demand for oil and gas went to zero, and the oil price fell from, I don't know, $75, well, briefly to zero, but then to $20. At the same time, Exxon, the best oil company in the world, got kicked out of the Dow 30. And so all the people who owned it in the indexes had to sell it. So you had oil demand in the tank, but you knew it was going to come back, or else your car wouldn't start, right? I mean, you knew this $20 was transitory. You knew it had to go to 60 or 65. And at least I knew that Exxon could only get kicked out of the Dow 30 once. When they're kicked out, you can't get kicked out twice. You're gone, so the index selling. And when those two things together happened, and the Exxon stock chart started to look like a brick thrown off a bridge, I was too stupid to buy it. I thought maybe it goes lower. The fact is that sometimes things get cheap enough. Now, I rectified that mistake after about 6 weeks, but I remember thinking to myself, after 70 years, or at that point in time, maybe 68 years or something, you're still so stupid that you think you can bottom tick a trade like that. I was disgusted with myself. It's like some guy comes up to you and he says, do you have 75 cents? And you say, why? He says, well, I want to trade my dollar for 75 cents. I think, well, God, maybe I should hold out for 70 cents. A dollar for 75 cents is cheap enough. You make the trade, right? And what I think happens, Daryl, is that information around value is tough to get, but information around price is easy. And price information is certain. It's valueless, but it's certain. Value information, however, you're never going to be right. And what happens is that you assign so much value to price information and you let your emotions take over on the value side of the consideration. Whereas if you had informed yourself as well as you could about value and use the price as a trigger to act in a circumstance where something was priced substantially below what its value is, which presupposes, of course, that you have confidence in your value assumption, then you make that mistake less often. And I need to say, in my own defense, I make that mistake less often. But even somebody who prides himself on employing the discipline that I do occasionally gives way to absolute emotional stupidity, like I did around Exxon. I'm amused by it, and I'm disgusted by my own stupidity doing that.